Good day, you're watching Businessworld Live. I'm Danie, Laurel, and here are today's top stories. Now, with the continuous rise in food prices, the Bangko Sentral expects inflation to have climbed even further in August. In a bid to lure more tourists to the country, the Department of Tourism plans to launch an initiative called Bisita Be My Guest or Bbm Guest Program. The Foreign Affairs Department says the Philippine government is open to new gas and oil exploration talks with China. And Filipinos continue to spend less on smartphones as economic headwinds weigh on consumer spending. We begin our broadcast with the Bangko Sentral expecting inflation to have accelerated even further in the month of August. Now, with the continuous rise of food prices, the BSP forecasts consumer price index to have settled within 5.9% to 6.7% last month. But the BSP says this could be partially offset by the decline in global oil prices, lower electricity prices, as well as a stronger peso. The upper end of the August inflation forecast, or 6.7%, would be the fastest in 45 months or since October of 2018. In July, headline inflation stood at 6.4%. The Philippine Statistics Authority will release August inflation figures on September 6th. The Budget Department defends the 588 billion pesos worth of unprogrammed funds tucked in the 2023 National Expenditure Program. Budget Secretary Amenah Pangandaman maintains there are no irregularities in the unprogrammed appropriations. Pangandaman also says unprogrammed funds have been part of the National Expenditure Program for more than 4 decades, serving as the government's standby appropriations. The DBM also stresses the importance of funds and projects on standby, especially for a country frequented by typhoons such as the Philippines, as they may be tapped in times of crises.
Pandemic or nung nagkaroon po ng increase nagkaroon po ng fuel hike, dito po natin kinuha po yung pondo para sa pagbibigay ng free bus carousel natin, additional funding po for our ayuda, and even po yung pagpapatayo natin ng mga clinics or yung mga services po sa health sector ng panahon po ng pandemic.
Now, House Deputy Speaker and Batangas Representative Ralph Recto earlier flagged the unprogrammed funds for not being itemized, comparing it to a blank check request. Recto also notes that the proposed 588 billion pesos is more than double the unprogrammed funds approved for 2022. The DBM, however, explains its funding will be supported by additional foreign project loans and excess tax collections.
Kung meron pong hindi tayo inaasahan ng pangyayari po para sa pandemic, or yung mga proyekto po dito na in-identify natin, pag nagkaroon po tayo ng extra revenue po from DOF, from BIR or Bureau of Customs, pwede rin po mag-trigger ng release ng mga proyekto po dito.
Now, more on those budget deliberations. This time, it is the Tourism Department's turn to defend its proposed appropriation for next year. Now, under the 2023 National Expenditure Program, a 3.2 billion peso fund is allocated for the DOT. But lawmakers from the House Committee on Appropriations say they want to provide additional funds for the agency, citing the tourism sector's contributions to economic recovery. This proposal was welcomed by Tourism Secretary Cristina Frasco. Still, one lawmaker questioned the agency's budget utilization rate so far this year, which only reached 34% as of the end of June. Frasco vows that they will aim to reach at least 90 to 100% utilization by the end of the year.
You are absolutely correct in pointing out that only 34% has been utilized as of June 30. And so immediately we coordinated with the operating units of the department to require them to submit catch-up plans to ensure that the utilization rate would vastly improve. You can rest assured that we will ensure the full maximization of the funds that have been made available to us within this year.
Thank you for that. Kasi sayang naman kung magdadagdag ng pondo tapos di rin ma-utilize.
Now, the DOT is also eyeing to launch the so-called Bisita Be My Guest or BBM Guest Program, which aims to give incentives like raffle prizes to OFWs or migrant Filipinos who invite family members or other foreigners to visit the country. Frasco says this will be done in collaboration with the Department of Migrant Workers and other agencies.
We will be providing them with a travel passport that they can use to go across key destinations, get stamps, and claim a prize at the airport. And this will also give them a privilege card that would provide them with discounts in accredited establishments across the country.
Now, how much money is really needed to get our tourism sector back on its feet? Here to weigh in, we have with us Benito Bengzon, Executive Director of the Philippine Hotel Owners Association. Good morning, Sir Bong. Welcome back.
Morning, Danie, and thank you for having me in your program again.
Sir, let's take a step back before we dive into the budget issue here. We're stepping into the Burr months. How has the year-to-date occupancy been in our hotels, and what can be expected now as holiday season approaches?
Well, the year-to-date occupancy rate is in the area of 60 to 80%. So it will vary according to the location of the hotel, and of course, it will also depend on how aggressive the marketing and promotions initiatives for a particular property is. But the turnaround point that we saw was in April this year when the government decided to remove all restrictions for fully vaccinated inbound passengers. So we're seeing a very good occupancy, and historically, the last quarter of the year is always, that's the final push, where we get very good occupancy coming from foreigners, from long-haul destinations, coming for the winter months, and also the strong demand coming from the locals and balikbayan, especially towards December.
Sir, you mentioned 60 to 80% occupancy rate. How does this compare to pre-pandemic levels, sir? And of course, how much hotels are fully operational compared to those that had closed during the pandemic?
We look at two performance indicators when we want to assess the hotels. First is the occupancy rate, and as I mentioned, we're looking at 60 to 80%. Pre-pandemic, it will probably be in the 70 to 85%. But we're also looking at the revenue, how much we charge per room. And obviously, we are still far from 2019 levels. But I think the good thing is that we're seeing recovery. The demand is being driven principally by the domestic market, staycation in particular.
Sir, what about the profitability? Is there any indication that we are approaching the levels of profitability? You mentioned that the revenues are still not there. How far along are we, and what's your expectation? How long is it going to take to get back to those levels?
Well, maybe to provide some bit of a perspective. Before the pandemic, we were generating 8.2 million foreign visitors, and there were about 110 million domestic trips. So you can just imagine the volume that the hotels were getting from this huge movement of foreign and domestic travelers. In the latest report of the DOT, they mentioned that for the first 8 months of the year, we're doing about 1.3 million. So we're still a long way off the 8.2 million. As far as domestic, for last year, I think we generated 37 million domestic trips. There are no figures yet for 2022.
Okay.
But I think what's important is that the hotels are doing very well. We've seen the worst. I think what's important is to continue to be aggressive in our marketing and promotions. As to your question on the recovery, in my opinion, it will probably take another year and a half before we go back to 2019 levels.
Sir, where are the risks tilted now? Because there's still, of course, revenge travel and people having a backlog in terms of bookings, but at the same time, inflation really eating into consumers' pockets. Are people going to stop spending on travel yet again? Or are you seeing, like you mentioned, that the worst is over and you're pretty confident na tuloy-tuloy na to?
Surprisingly, and this is a bit of a good news, the price has not really been an issue, even for Filipino travelers. Now, from the reports that we've been getting from our member hotels, they don't really care too much about the price. What's important is that first, we assure them of the safety while in the hotel premises. And then second is that we provide a better travel experience for them. So many of the hotels are being innovative, they're being creative. Some of the hotels, for example, are offering, pet-friendly rooms. Some of them are offering healthy options in their restaurants or outlets. So we're seeing a lot of creativity. And this has created a lot of additional revenue stream for our hotels.
What are the trends now post-pandemic? Are people traveling? You mentioned domestic travel is pulling its weight. Are people doing, so Bloomberg calls it comfort travel, going to places that they like and frequently? Are there new areas that suddenly, are not the Boracay's, but other small areas that people are frequenting now, especially since the focus is probably less on Chinese tourists that used to pull in the weight and now more on domestic people?
What we're seeing across the different travel segments, so whether you're leisure, whether you're in the MICE business, is the growing preference for outdoor activities. So even the restaurants are now offering more alfresco options. For those who are organizing parties or special events, we're seeing a shift towards the outdoor type. In terms of the destinations, of course, the beach destinations, the resort destinations will continue to be a very strong draw among domestic and foreign travelers. I think the other thing that we'd like to mention is that there's growing awareness and appreciation of sustainability or green initiatives. So we're going to see a lot of travelers who will be looking at sustainability practices in hotels, resorts, and other accommodation facilities while they're staying.
So which segments are catching up faster? The luxury or the budget travel or the business travel?
Well, it's quite balanced. But in the case of the Philippines, that's, as I mentioned, what's really drawing the demand is the domestic market. And again, the advantage of the Philippines is that we have a very large domestic tourism base. And that's the reason we were able to generate 110 million domestic trips in 2019. As far as business travel is concerned, from the studies that we have reviewed, what is important is for us to remove the protocols to make it as easy as possible, because airfare will probably not be as much of a factor for business travelers. But what came out in our interviews is the need to further ease the restrictions, especially when entering our borders.
Okay, so let's shift the discussion to the budget. This BBM Guest Program, is this something that you expect to be a real boost?
We have not seen the details of this particular program, but on the part of the Philippine Hotel Owners Association, any program that will position the Philippines very strongly, very competitively to the foreign market is obviously welcome. I think it's important for us to also take note that our neighbors are moving very, very fast. In fact, some of them opened their borders ahead of us. So we really have to make sure that we remain competitive, across all operating areas, whether it's in service or facilities or even the flight connection. I think overall, what's important is for our association, the Philippine Hotel Owners Association, to support the initiatives of the Department of Tourism.
Sir, lawmakers yesterday flagged the DOT's budget utilization only 34% until June at least. What is going on here? Why was the budget not utilized, especially since it's trying to recover? And like you mentioned, we're behind other neighboring countries already. What does that tell you about the efforts to market the tourism?
Well, I can only venture, I guess, the DOT would be the best position to address that. But there are many factors. No? Maybe there are some events that were not implemented, for whatever reason. I think what's important is the DOT has already assured the lawmakers that it will take the steps to increase the utilization and that it will develop a catch-up plan.
Okay, and finally, sir, before we let you go, outlook for 2023, is there, spillover effects from especially the air travel figures that have been quite good in the second quarter, and how is this going to affect the bookings by 2023, sir?
barring any outbreak, I'm confident that 2023 will be a much better year for us. Like I said, the turnaround point was earlier this year, early part of 2022. And we're confident that with the restoration of domestic and international flights, we'll be able to recover perhaps even ahead of the projected 2024.
All right. So as you mentioned, sir, people still enjoying travel and our utilization increasing, and even the issue of inflation for the moment not really affecting the industry. Hopefully, worst is over, as you mentioned. Thank you so much, Bong Benzon, Executive Director of the Philippine Hotel Owners Association. Thank you, sir.
Good day.
Pausing for a quick break, but coming right up after that. The Energy Department forms special committees to review the proposed sale of a stake in the Malampaya project. More of that and other stories when Businessworld Live returns. Stay with us. You're still watching Business World Live here on One News. I'm Danie, Laurel, and this just in, TV5 parent Media Quest and ABS-CBN have terminated their landmark investment deal. In a disclosure, the companies said they have mutually agreed to terminate the investment agreement covering ABS-CBN's acquisition of 34.99% stake in TV5 for 2.16 billion pesos. Now, the deal also covered a convertible note agreement where ABS-CBN's stake could increase to up to 49.92% subject to regulatory approvals. Meanwhile, Signal Cable and Sky Cable have also decided to terminate their investment deal. Signal Cable was supposed to acquire a minority 38.88% stake in Sky Cable for 2.86 billion pesos. The termination of the deals were formalized through a memorandum of agreement. In other news, the Energy Department has formed special committees and tapped consultants to review the proposed stake sale in the Malampaya project. The Special Technical and Financial Review Committee will be chaired by Rufino Bumasang, who previously served as president of state-led Philippine National Oil Corporation. A UDENA unit has a pending deal to acquire Shell Philippines Exploration or SPEC's 45% stake in Malampaya. The acquisition is awaiting approval from the DOE. Another UDENA unit had earlier acquired a 45% stake held by Chevron. This deal was approved by the DOE last year. Meanwhile, PNOC is seeking legislative approval on its plan to establish a national SPR or a strategic petroleum reserve that will serve as the country's permanent oil stockpile. This, as PNOC aims to find a solution to what they describe as the severe disruption of oil supply caused by geopolitical events, calamities, or emergencies. The state-run oil firm is also eyeing to implement fuel discount programs, and with this, they are now asking Congress for a 2.5 billion peso funding for next year.
The difference, good Senator, is that we are doing this in terms of discounted fuel rather than money. We will be designating specific service stations.
The Philippines is open to new talks with China on conducting a joint oil and gas exploration in the West Philippine Sea. Foreign Affairs Secretary Enrique Manalo says the government has already indicated its readiness to resume negotiations with China. This after the previous administration's talks with China on a joint exploration fell through in June. Now, according to Manalo, they decided to reopen discussions with China as it is the only country at the moment that expressed interest in entering a joint exploration deal with the Philippines. However, the DFA assured lawmakers that it will not compromise the Philippines' legal claims in the disputed territories in the new round of negotiations.
We insisted on application of Philippine law kasi West Philippine Sea is part of the Philippines. Our hope is that whatever agreement is reached, we will not agree to anything which is inconsistent or against the Philippine Constitution.
And here's some respite in the face of rising commodity prices. Some oil firms have announced a rollback in LPG prices that's effective today. Petron and Phoenix Petroleum are implementing a 1 peso and 75 centavo per kilogram rollback in LPG prices. Soleil's LPG prices will meanwhile go down by 1 peso and 62 centavos per kilo. On the other hand, auto LPG prices of Petron Gasul decreased by 98 centavos per liter, while Phoenix's auto LPG slide by 95 centavos per liter. The Securities and Exchange Commission has issued a permanent cease and desist order against online lending operators SkyMart With You and Spend Cash. The SEC denied the respective motion of the three entities to lift the halt order against them for lack of merit. The order was issued in February after the Commission found that the three operators were engaging in lending and financing activities without securing the necessary licenses from the SEC. The regulator said the three lending operators violated relevant regulations, such as the requirement for registered lending and financing companies to disclose and report their online lending platforms to the SEC. Now, a market intelligence company says Filipinos spent less on smartphones in the first half of 2022. According to the International Data Corporation, smartphone shipments to the Philippines fell to 4.3 million units in the first 6 months of the year. That's 3% lower compared to the same period of last year. The company also noted that shipments of smartphones under $200, or about 10,000 pesos, significantly improved since the last quarter, but remained low on an annual basis. Shipments of pricier models also slowed as consumer spending declined due to economic headwinds. The increase in prices of goods is expected to continue its pressure on consumer spending on smartphones. And those are the biggest stories on the economic and corporate front today. I'm Danie, Laurel. We are One News, all sides, all the time. Don't go away. We'll give you the latest on the local boards when Businessworld Live returns. Stay with us. And you're still watching Business World Live here on One News. I'm Danie, Laurel, kicking off the market report with ABS-CBN, which is currently on a trading halt after that deal with MediaQuest, or the parent company of TV5, did fall through. Now, if you can see on my chart here, of course, the stock had been performing quite well since talks of that situation, or the partnership went, so that's above 16.5% up in 1 month. But if you take a look at what's been happening, or the sentiment that's been happening in the past 3 days, that's already been down 5.8%. So it's very interesting to see. We have no details yet on when this trading halt will be lifted. It's going to be very interesting to see how that stock will be performing once that halt is lifted. Now, let's take a quick peek at how our markets are doing 30 minutes into the trading day. Finally, a bit of some fresh air here, back to 6,600 levels. After we had dangerously gone, or tested the psychological support levels of 6,500, we were actually the most fallen in Asia yesterday. But there were a lot of things going on yesterday, apart from, of course, Fed tightening, inflation expectations. You actually had the MSCI rebalancing as well happening. You've got Converge, URC, and MPIC reducing in weight. And if you can see now, those companies which were most sold off yesterday are some of the best performers here. So you can see Converge up by 2.6%. Meanwhile, on the down end, you've got SM Prime pulling the weight of the index down by 1.7%. Of course, there's going to be a lot more to digest. Painful pronouncements, August inflation possibly up to 6.7%. So a lot still being watched out for there. Meanwhile, one sector I did want to watch out for are the banks. This, of course, as you know, it's very much related to the interest rates and tightening that the BSP says they will be doing, whatever it takes, of course, to battle that inflation. They're going to be looking very closely into that data. Meanwhile, you've got July money supply rising 7% year on year. That's higher than how it rose on June year on year. Now, if you take a look at the loans, that's actually up by 12% year on year. And ING's Nikki Mapa has actually mentioned that bank lending is benefiting from the easing of monetary policy, meaning lower interest rates driving people to get more loans. But he did mention that might change, or of course might be swinging by, those gains will be capped, that's what he says, by the recent tightening carried out by the BSP. So the higher the interest rates go, possibly that lending or borrowing will also be going down. And finally, one quick check on our oil explorers here. This, as of course, DFA Secretary Manalo has said that we are open to new talks with China. As per the President, BBM says he was ready. Reaction yesterday was quite some joy at our drillers. Take a look at PXP Energy. Just in the past 5 days, up by 21.5% already. Yesterday, Oriental Petroleum was also up by 20%. And that's it for today, September 1, 2022. Join us again tomorrow. That's exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News live anytime, anywhere. I'm Danie, Laurel. Mask on, wash hands, stay safe, Philippines. We are One News, all sides, all the time.